Larry Glazer joining me right now on these crazy markets in these next few days. Larry, these are interesting days for market trading, right? A lot of folks aren't around, but a lot of things happen just the same, punctuated by very light volume. Explain what happens.
Certainly, investors should brace themselves for periods of renewed and heightened volatility. It's interesting. This is typically the period we look for that Santa Claus rally. But this year, Santa Claus hit a few speed bumps on his way to the rally. He's had challenges finding those reindeer to guide him through the end of the year. And part of the reason, Neil, is it's a year where, although the major market averages did nothing, we saw a big divergence. We saw growth stocks actually do pretty well. We saw value stocks do very poorly. So again, those major market indices did nothing. It doesn't tell the whole story. And the reason for that is we're seeing a change in Fed policy. As we get higher interest rates and we get a change as the Fed normalizes the bond market, we'll see higher volatility. And we're beginning to see that over the last few weeks. And that could lead into what we see for 2016, 2017. It's a preview of the movie to come. And I think it's a good thing for investors to welcome that volatility. We want to use this limited liquidity, limited volatility, light volume at the end of the year. We see investors wanting to close up the books, but they had a delayed close in those books because of that Fed announcement. They had to sort of stick around for a few extra weeks before they go on their ski vacation or before they head to the beach. So we see tax loss selling really hitting stocks at the end of the year. If you're in the energy sector, the commodity sector, MLPs, gold, emerging markets, people are throwing out the baby with the bathwater because they want to take those losses. And often we see what's called the January effect, where those stocks that are really hated at the end of the year get a bounce as the selling ends. So that's an opportunity for investors. If you're working those last 10 days of the year, you can maybe pick up some bargains, things that shouldn't have been sold, things that aren't so bad. Look, maybe oil won't stay below $2 a gallon forever. Maybe it will come back. Maybe you can get some bargains, some really high quality companies. Maybe not all of the emerging markets should be thrown out. Maybe India is going to come back next year, even if China doesn't. So this is the time of the year we make our bargain shopping list. Just like you get that sweater at half off when it's 60 degrees at Macy's, you can get some great buys in stocks this time of the year. So I think investors want to keep their eyes open, not just give up, not just close it up, not just head away, but maybe do a little bit of shopping at the end of the year and get that shopping list ready for January. And this is really when it starts. So I'm excited about those opportunities, despite the fact that it's been a pretty lackluster year overall, and despite the fact that we're in this more volatile environment.
Good stuff, Larry Glazer. Thank you very, very much.